Hi, just a quick disclaimer. The information in this video is not intended to be legal advice of any kind. You should always consult your tax professional or the person preparing your income tax return if you have any questions. Debt cancellation can happen when there's a partial or total forgiveness of debt. Debt can arise from credit cards, loans for homes, primary residence, loans or mortgages for rental properties, student loans, repossessions for vehicle, boats, RVs. There are many different areas where you can have some debt forgiveness and debt cancellation income. If you should receive a notice CP2000 from the IRS, it will clearly outline the consequences of not reporting the 1099-C and the changes that will be made by the IRS to your tax return. This would include additional income tax, possibly. It could include a reduction in earned income credit because of the income limitations. It could include a reduction to education credits and some other credits due to income limitations. And it could, depending on the size of the debt that was canceled, include accuracy-related penalties and interest. Generally, the IRS doesn't find this error until a year or two later. So there could be interest that has accrued on the additional tax owed. Now, you have to remember that when you get this notice, it's important to review it carefully and make sure that the 1099-C information was reported correctly by the lender. There could be mistakes, and if that's the case, you need to contact the lender immediately and get the correction made as soon as possible and let the IRS know so they can correct things on their end. Now, what happens when you get this notice? Well, if it's accurate, you need to respond to the notice and let them know that you agree to the changes. You can include payment with the CP2000 notice, or you can make payment arrangements. But there are a couple of other factors that could be important. Are there any exceptions to this additional income that could apply? Exceptions could include if you had debt cancellation for your primary residence, you may be entitled to a $1 million exclusion if you're a single return. It could be up to a $2 million exclusion of the canceled debt if you're a jointly filed return. Also, if there is a disability, permanent disability, or even death of the taxpayer, there could be an exception to the additional income tax on that canceled debt. And if there's bankruptcy or insolvency, that could also lead to an exception of additional income tax on this canceled debt. It's really important that you speak with your tax professional because every circumstance is different. So you want to get advice from your tax professional if this should occur, if you should get a CP2000, or if you realize you have a canceled debt 1099-C. If you agree with your CP2000 that was issued by the IRS, it's important to understand that when they fix the final tax liability, they will also inform your tax state of the change. And so there could possibly be additional income tax to your state. So it's important to talk to your tax professional or file an amended tax return for your state so that you can accurately inform the state of the additional tax and pay the interest on that tax before they do. The longer that you wait to do that, the interest will keep accruing, and then you risk the possibility of additional tax penalties from your state. It's very important that you tell the person preparing your income tax return if you have cancellation of debt, so you can make sure that it's discussed and appropriately dealt with. If you have any comments or feedbacks regarding debt cancellation, please put them in the comments section below. If you liked our video and it was helpful, please hit the like button and subscribe to our channel, as we expect to put weekly update videos regarding tax laws or changes. And certainly if you have any topics you would like to see addressed here, list them in the comments below. Thanks for watching.